So Flora, we've talked about the level of private capital focused on London, and I suppose the other side of private capital will be institutional capital. So we have two kind of key investment groups looking to deploy into kind of the London commercial and residential market. But just focused on private capital, I suppose our understanding of what private capital is thinking, what they're looking to do, where they see opportunities and risks is so important. And you've undertaken an attitude survey into how private capital is looking to deploy this year. What were the key findings in the survey?
Well, I think there's a couple of interesting things. So each year we ask our survey respondents to pinpoint their top things that excite their clients, as well as the things that concern their clients, their ability to create and grow wealth in the coming year. And I think unsurprisingly, 80% of our survey respondents, the biggest concern was the ongoing pandemic. But on the flip side, almost 90% cited the new opportunities because of in the post-pandemic world as their number one opportunity. So I think that's really exciting and a good way to look at it. Also, one of the things that came out of the survey this year is that our survey respondents were the most positive about wealth creation that they have been over the recent years. So there's a lot of positivity about the new economic cycle coming out of the pandemic, the pace of recovery. And we're seeing more and more positive news coming out of forecasts, the IMF upgrading their global forecast. There's a lot of positivity in momentum. One of the things that our survey respondents cite as a real opportunity and exciting thing is technology and healthcare and all of these new investment opportunities, the idea of ESG, the idea of succession, all of these things are really exciting. On the flip side, where there are opportunities, there are also risks. The rising inequality because of the pandemic, the K-shaped recovery, these things are really concern our attitude survey respondents in terms of the ability to create and grow wealth, what governments will do to try and balance the book and to bring back some of that inequality into check. Wealth taxes, property market taxes, all of these things are being mooted across the world and garnering more attention. So that is also something we'll be watching closely. So one of the things that came out of the survey is that the idea of succession and the wealth transfer to the next generation is something that excites and also worries our clients and our survey respondents. What are you seeing in terms of what the next generation and succession plans are?
It's such an interesting point for us because we have so many conversations with multi-generational families, and you get to see different investment perspectives from the different generations. I think the survey showed that just under 60% of our clients are reassessing succession planning, and it's a very kind of broad subject matter. But in short, it's back on the table, it's an agenda item, and I think families want to make sure they are future-proofing their portfolios for whatever is ahead. I think we're going to see an evolution and an acceleration of trends. We talked in the Wealth Report actually as well, which links so well into London, about some of the behavioural shifts that we're seeing accelerating at the moment because of what's happened in the last 12 months. And I think families are, in some cases, handing over more responsibility down to younger generations. Those are younger generations that may be educated overseas, they're very tech savvy, they're into technological disruption, into AI, they're more into ESG, with the environmental piece being really key into that, and more into philanthropy. So I think those 4 points, from tech to AI to ESG and philanthropy, will evolve their family investment strategies. So we expect to see continued appetite for real estate. I think London will stay firmly on the agenda. We're seeing our buyer profile in London, for example, getting younger in London residential. So we're seeing younger, more tech-savvy, tech-enabled buyers coming through. I think the comfort with e-commerce. 60% of younger generations are now shopping online, which is a lot more than older generations. So I think we will see a natural evolution. I think we'll see a focus on best-in-class green buildings, whatever that means, but buying the best building you can in central London that has a kind of green stamp on it, which will in turn attract the best quality occupiers. I think we'll see clients focusing where they can on distribution and data and e-commerce and everything that comes with that, trying to target tech tenants and occupiers in their buildings. But generally, I think the love affair with property for private clients will continue. So the 1/3 of all commercial transactions coming from private sources, I see that continuing with succession planning being back firmly on the agenda.
There are key risks that we brought out in our attitude survey. How is that playing out in terms of demand for property?
This is what's so confusing at the moment. We're 12 months into this pandemic, and you've just touched on the fact that March saw record levels of new registrations and exchanges and interest in the residential market. You've also touched on 46 billion of capital focused on commercial markets in London. So even through 12 months of turmoil and uncertainty, a lot of our clients have gone home and they've rethought what they want to do with their residential and commercial portfolios. They've rethought what London means to them, and they're registering. They're applying to buy more property, again, residential and commercial. And some of those younger generations are very tech savvy and comfortable with virtual viewings. So the levels of demand are very high. We have 1,000 applicants, for example, at the top end of the London residential market, which is also a 10-year high for us. So I think the last 12 months has been such a useful time for that reflection period for families to really think, is it lifestyle or is it investment? But the net winner, in my opinion, seems to be London, because London is shining through as a safe harbour and a safe haven to invest. It's still sitting alongside New York, and I think we're happy to jointly share the top spot with New York. But I think London will come through this having shown resilience, having shown it's a good place to do business and also a good place to live.
Thank you so much for watching, and thank you very much, Rory, for all the insight that you shared. To find out more, please visit the London Report website.